Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slideshow for Friday, December 21st. Today, I have a bit of a change. After doing the same format for probably a year now, I decided to shake things up a little bit, and hopefully you won't mind too much. Changed the chart format around a little bit, and I switched over to looking at ETFs. I had been looking at the SPX, and so now I'm going to look at the SPY. And really, the only difference is the SPY is actually tradable. It still tracks the broad market, but I know that some people like the ETFs better. So I thought I'd give it a try. Let me know what you think. If everyone hates the new format, I might be inclined to go back, but thought, let's change it up a little bit and see how it goes. Okay, so we switch to the charts I want to talk about. The first thing you'll notice is that I've done away with that quad view where we had the four charts all in one pane. I like that is a quick overview. What I found is I'd rather have a chart where we can expand it out and talk about it a little bit more in detail. The other thing I found is that over the last year, I tend not to talk about the Dow as much. I don't rely on the Dow. It's just 30 stocks. It's an average. I tend to look at the SPX, the comp, and the RUT. So I wanted to kind of switch to those ETFs. So that's sort of the logic behind switching the views. I want to start with the IWM today, which tracks the Russell 2000. On Monday's chart slideshow, we saw that the RUT had slipped to the lower end of the range here, down in this area, and that was somewhat curious because it was weaker than the other indices. The other indices were near the midpoints of the range. So anyway, the idea was I said I would be watching the RUT this week to see if these lows held or if we saw a breakdown. Earlier if you've been reading the blog this week, obviously we did see a bounce. Basically we had a good day yesterday. We're continuing that today, and that's allowing the RUT to sort of the IWM here to sort of move off of the low end of that range, and that was obviously connecting those. And if you connect these, you've got that overall trading range we've been discussing. So now we turn to the SPY, which tracks the S&P 500, and basically you see that trading range that we've been talking about outlined right here. Basically the point we were talking about last week is, let me clear this chart off here, the lower peak here versus right here, and sort of the higher low versus that, and right in there is kind of forming. Basically we're seeing a contraction of the range, and we talked about that, that potentially moving into next week with volume expected to be light, that could lead to whipsaw moves, which I guess could lead to a breakout, but I'd be more inclined to think it's gonna just kind of drift as we kind of ride the year out, but it'll be interesting to see how that plays out. Okay, the last chart I want to talk about today is the QQQQ, which tracks the NDX. I have been watching the comp. The comp and the NDX are fairly correlated. I like talking about the QQQ. I'm still in the old habit of the three Qs back in the day. If you were looking at the comp chart, it's overall very similar, but obviously the cubes have options, and you can trade the cubes. So basically what we're looking at here is, you've got this low down in here, and you've got this high, and that's sort of defining the recent range here. Shorter term basis, we've got short term support there, and we've got the resistance there. So basically what you've got is a little mini range inside of these highs and lows here. Not too much stands out. The one thing I haven't talked about yet on these charts is this bottom graph here. That is the RSI. It's a 9-day. Clear off the chart. I look at that as just a quick way to gauge overbought, oversold. Right now it's kind of the midline readings, which fits with everything we've been seeing. Basically, middle of the range on the SPX, the SPYs, the cubes here. And really, the small caps are the only ones that aren't in the middle of that range, and they're trying to bounce off the low end. As far as overall takeaways from these charts here, we've kind of, I've kind of just glossed over them because basically we're left in pretty much the same situation as Monday. Middle of the road on the SPX and the comp, SPY, and here we've got the IWM again trying to bounce off these lows. Next week, I think it'll be, see how that plays out. I would still be keeping an eye on a breakdown into this range as a potential warning sign, but I would expect volume to be light next week. Basically we've got shortened day Monday, close Tuesday, and then 3 days, and then you roll right into the New Year's Eve holiday, New Year's Day holiday. So, there's a lot of people going to be out, and myself included. I'll be out of the office on Monday and Wednesday. But basically, those lows, there, I would like to see us hold above there. If we see a breakdown there, I think that's a potential warning sign. But I wouldn't. I would stress potential, just given how light the volume's going to be, and you don't have full participation. So anyway, that's where we stand. If you really hate this new format, let me know, and if everyone hates it, I'll consider moving back. Otherwise, I'd like to try to keep moving forward with it and hopefully get a little more streamlined as I get more used to it. So anyway, wish everyone a Merry Christmas, have a great holiday, and I will see you next week.